Question: would you rather put $8,000 into your Roth IRA today or save $93,000 in taxes over your lifetime? Because one of my clients was about to make a mistake that could have cost her a fortune, and you might be on the same path. Most people don't realize that when you retire, everything changes, especially how you should think about income taxes. Stick with me and I'll show you exactly how we plan to turn her $8,000 into nearly six figures in tax savings. And if you stick around until the very end, I'll tell you the number one advantage that we have over the IRS in retirement. An advantage that simply doesn't exist while we're in our working years. My name's Ben. If you're new here, I want to help you have an even better retirement. So let me introduce you to my client. She worked in January and February, and in March she's finally retiring. She was excited about making a contribution to her Roth IRA because in previous years her income was too high to contribute. Now, because she was only working for the first few months of the year, she had enough income to make a contribution, but not so much income that she couldn't contribute to a Roth IRA. And because she's over 50, she could actually contribute $8,000 in 2025. Now, here's the part that might surprise you. I did not have her make a Roth IRA contribution. Instead, we used those funds, the exact same amount of money, $8,000, and we used it to save her almost $100,000 in income taxes. Now, I'm going to show you exactly how I did that in a moment, but first, we've got to understand why we would want to make such a drastic change in our approach. We went from saving money in retirement to something really very different. While we're in our working years, our focus when it comes to wealth building and taxes, it tends to focus on each year individually. But once you retired, that really needs to change, and our focus has to shift to our retirement as a whole and less on each individual year. In retirement, we need to think of terms of decades if we want to avoid overpaying the IRS. Let me show you working mindset. Lower income today, pay fewer taxes this year. Retirement mindset, lower taxes over decades, not just this year. So back to my client's question, should I invest $8,000 in my Roth IRA? Well, shifting into thinking in terms of decades, what if we use that $8,000 differently? What if we use that $8,000 instead to voluntarily pay extra taxes? Now, I know that sounds completely insane, but this is a retirement tax planning power move. By paying $8,000 in taxes now, we can actually move $36,000 from her traditional IRA to her Roth IRA using what's called a Roth IRA conversion. That means instead of just adding $8,000 to her Roth IRA this year, she saves $93,000 over her lifetime in taxes. And believe it or not, if we repeat this process a few more years with the same amount of money, we can save her over $800,000 in taxes over the course of her retirement and save her an additional $100,000 in extra Medicare taxes, simply by changing how we think about taxes by thinking in terms of decades rather than each individual year. And that's actually a little bit of a spoiler alert for our number one advantage that we have over the IRS in retirement. And I'll tell you that closer to the end of the video. So let's jump into my tax software and I'll show you how we're going to save her all this money. All right, so what we're looking at in my computer is my tax planning software. If you're a financial advisor, you're probably familiar with this. It's called Holistiplan. And we've got our tax scenario from 2004 on the left side, and then what we're forecasting for our client on the right side. And the main thing that we're looking at as we scroll down is a Roth IRA conversion. And so we're going to pop into our Roth conversion spreadsheet, and we are going to spend $8,000. And we're going to intentionally spend this $8,000 by paying extra taxes. So we're going to look at $36,363, if I'm doing that math in my head correctly. And you can see here the incremental cost of this Roth conversion is $8,000. So rather than putting the $8,000 in our Roth IRA, I want to voluntarily take $8,000 from my cash flow, and I want to pay taxes on moving $36,000 from my traditional IRA to my Roth IRA. And we're going to show you what the tax savings is going to be. So here we are again in my tax software. Now, this is based on a real client, but we always use the examples of Jim and Pam Halpert. They work for a paper company in Pennsylvania. They're fictional television characters. Of course, we want to protect any listeners or clients that submit their information to us for illustrative purposes. So real numbers, fake names. Jim and Pam are married and filing jointly in tax year 2025. And as far as some savings information, they've got about $50,000 in savings outside of, they've already paid taxes on. They've got about $1.4 million each in tax deferred assets. That would be like IRAs and 401ks. Total assets, investable assets, about $3 million. Pretty common for clients that we work with, of which about $200,000 in Roth assets. Now, the reason for that imbalance for many of our clients is because while they are working, they're saving into a 401k, and they're looking to defer as much of their income as possible. They want to save money on taxes on the front end, and then when they're retired, if their retirement income is slightly underneath what their wages were, we can actually have some great arbitrage where we take a deduction on our high income and then we undo that deduction with a Roth conversion once they're already retired and we have more control over our income. So $3 million of investable assets. And then what we've got here is our Roth conversion. Just one time, we're converting $36,363. Again, that's in lieu of putting $8,000 in her Roth IRA. We're simply paying $8,000 in extra taxes. And we just do that just the 1 year, moving that back to zero in 2026. We have our friendly little chart here. Rate of return of 7%, no guarantees, of course, and then an inflation assumption of 3%. And then Jim and Pam, they've done a great job saving, so we're going to help them do a great job spending. They're going to spend about $120,000 per year. Now, this is the first clue about how much total taxes we're going to pay over the course of our retirement. I'll reveal that to you, but the cause for paying so much in taxes is inflation, which is the silent killer of our retirement plans. So $120,000 in income annually at a 3% inflation rate, what we're looking at is $10,000 a month, $120,000 a year in 2025. That's buying $10,000 worth of stuff today. 10 years in, we've already increased that to $161,000 just to buy the same amount of stuff as $10,000 a month in 2025 dollars. That's a power of inflation. 10 years beyond that, we're already over the $200,000 per year mark. And then all the way out to age 100, they're spending over $350,000 a year just to buy the same $10,000 a month worth of stuff in 2025. So for many people, they've got to double, if not triple their income over the course of their retirement to have that same purchasing power all the way through. And that's the reason we pay so much taxes in retirement, is because there's so much more income than you might expect if you're just looking at the first couple of years of retirement. That inflation slowly creeps up and ends up that we have to take out significantly more income, which means a lot of taxes. All right, so Jim and Pam's situation, how much are they going to pay in lifetime taxes? Well, drum roll, please. They're going to pay about $3 million in income tax over the course of their retirement. And how much can a one-time Roth conversion, spending an extra $8,000 in taxes voluntarily, paying more taxes now to pay less later, and moving $36,000 from the traditional IRA to the Roth IRA, well, it'll save them $90,000 in income taxes over the course of their retirement. No small amount. In retirement planning, we say that small hinges swing big doors. Little things like spending $8,000 differently, rather than making a Roth IRA contribution, paying extra taxes with that $8,000. Small things done consistently can have massive impact over the course of our retirement. Now, you're probably asking yourself, Ben, nobody does one-time, one-year Roth IRA conversions. I want to see what the numbers look like if they do that every year for several years in a row. And that's exactly what we've got prepared for you here. So we've got the same situation, Jim and Pam married filing jointly, the exact same asset situation, but now rather than do a one-time $36,000 Roth conversion, we're going to do Roth conversions of that same amount. We're going to do that all the way until required minimum distribution age. And because Jim and Pam are a couple and we view them as a household, we're not going to move $36,000 just from one account. We're going to split it between both accounts. It wouldn't make sense to deplete one IRA from Roth conversions and let the other one grow, because that's still going to give us the same issues with required minimum distributions down the road. So we're going to equalize this. So that's what we've got here. We've got several years of $18,000 Roth conversions, half of $36,000 for Jim. And then we've got the exact same thing over here for Pam, several years of $18,000 Roth conversions for Pam as well. All of our other assumptions are exactly the same. Income doesn't change, Medicare doesn't change, life expectancy doesn't change, Social Security doesn't change, and we're killing them off at age 100. So if we do this little thing every year for several years, how much could we save by voluntarily paying an extra $8,000 in taxes from the day they retire until when they start collecting required minimum distributions? Well, drum roll please, we think it can save them up to $818,000. And that's the power of thinking in decades rather than thinking in terms of individual years. Many times in retirement, volunteering to pay more taxes on the front end allows us to save significant amounts of money on the back end. How much would your retirement be improved by an additional $800,000 after taxes? Now, maybe you won't live long enough to enjoy that, but your beneficiaries might. So tax planning is really important. And that's one of the keys of tax planning in retirement. One of the trickiest parts is you've got to do the tax planning 10 years or sometimes 30 years before you need it. We got to be able to look out into the future and say, how much taxes do we think we're going to pay in terms of decades? And then does it make sense to reach into the future and pull those cash flows forward in order to pay a lot less taxes later? We talked a lot about IRMA, that's income with respect to the monthly adjustment amount. No, the M in IRMA has nothing to do with Medicare, even though this entire concept is about Medicare. Yes, it also drives me crazy. I'm sure it drives you crazy as well. But our IRMA surcharges, by moving money from our traditional to our Roth to the tune of $36,000 per year for several years, we can actually save an additional $115,000 in IRMA surcharges. So if all of our projections are right and tax rules don't change, we think we could save Jim and Pam almost $1 million in taxes just by doing a couple little things differently, and the big picture, changing how we think about taxes in retirement. All right, so what did we learn? We learned that when you're retired, everything changes, and smart tax planning can save you hundreds of thousands of dollars. Our number one advantage over the IRS is that the IRS only thinks in terms of individual years. But when we're retired and we have unlimited control of our income, we get to think in terms of decades. And that's how we win the game of paying less taxes in retirement. So what do you think? If you had an extra $8,000 in your pocket, would you rather make a Roth IRA contribution, or would you be willing to voluntarily pay more taxes now in order to pay a lot less taxes later? Let me know in the comments. I hope you love this video. I hope it makes your retirement even better. If you love this video, I think you'll love this video next.